Hey everyone, it is Evan here from the Trade Risk on Tuesday, September 25th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. Thanks so much for tuning in. As always, if you like these videos, do subscribe to our YouTube channel. Keeps you up to date with all of the latest that we're publishing every Tuesday and Friday for these market recap videos. So let's jump right into the action here with the S&P 500 cash settled market, and we're looking at a weekly time frame. You can see here that we are lower to start off the week here by just under 0.5% in the S&P 500. That started with a gap down on Monday and a little bit of sideways to slightly lower action here on Tuesday. So when we look here at the weekly time frame, each bar represents 1 week worth of trading. You can see we have currently an inside week forming. That means we are completely encapsulated within last week's trading range. We're below the highs from last week. We're above the lows from last week. And we are kind of just chopping around, moving sideways and pulling back a bit in the short term. On this weekly time frame, however, though, we are still above all major trend lines. We are still rising, grinding higher in this same kind of trend. The larger structure here is still very much intact. And if we zoom in a little bit further, which will become clear on the next chart we're going to look at, we are back to the highs here from the end of August that we broke out from last week, and now you can see we're kind of coming back in and challenging those levels now. So let us go down to a daily chart and take a look here a little bit closer at what that level is. If we look here back on the 29th of August, we can see that the highs in the S&P 500 were 29.16. We closed at 29.17 today, and you can see we're just right back to testing that zone. We were testing it and slightly below it yesterday on Monday's session at the lows of the session, but we did manage to close above it, and again slightly above it here today on Tuesday's close. So for the very short term active traders here, this is a reference point to pay attention to. Clearly the market seems to care about it here in the short term, as we're seeing the market kind of just grind on top of this level right now. And if we do see further weakness below this level, then we do have a bit of what could be considered here to be a false breakout from last Thursday's session, as we kind of zoomed above all of these recent highs here. Friday we had that mini kind of reversal, or at least just a pause in the action, and then a little bit of follow through to the downside so far this week. The damage here is very contained. There's really no damage to speak of. It's simply a pullback, a check back to this level, and now we just want to measure, how far, and if this pullback continues, how far does it go? Some will look at this kind of trend line, the slope here, from which we've been moving higher since we bottomed out on this September 7th here in the shorter term trend. You can see this is just very much a inflection point in the short term, and this is a level to pay attention to. So that's very much the near term level. And then 28.72, this is the bigger level. This is where I do think it's more of a high stakes game. If we started to lose 28.72, that's about 1.5% below where we currently stand. If you recall, 28.72 was the all-time highs back in January of this year. That is what the S&P 500 effectively broke out from over the past couple of weeks. So that'll be the bigger level right here to pay attention to if we start to lose this very nearby support that we are currently testing. So that is the S&P 500. That's the relevant levels that I'm paying attention to. Right at today's lows is 29.12, 29.13 area. Then you have this round 2900 levels, nice psychological level that may play a little bit of an impact there, but this 28.72 is certainly the elephant in the room still that we want to see this market hold above if we are bullish. The other thing that is sort of back on everybody's radar right now and arguably pressuring markets again, equity markets, is just rates in general. But when we look here at the 10-year yield, you can see we are back now to year-to-date highs, so north of 3% here in the 10-year treasury. If we look here at a weekly time frame of it, really this looks like some bullish consolidation for rates over the past several weeks, as we've kind of chopped around and moved sideways here, and now we're continuing this trend to the upside. So if this continues here, especially at a fast rate, I would have to imagine that is going to put some pressure here on equity markets as it starts to digest what this, the impact of this anyway for equities as a whole. So something to pay attention to there, 10-year yield going forward. If we go back to some of these other major markets, we'll go to the Russell 2000 here, which again, we've been talking about this consolidation. This is nothing new. It's still just a wait and see market here. It's gone sideways for the past 4 weeks now, back to this 169.50 area. And when we look here at the weekly chart of the Russell 2000, there is nothing here that suggests that this is an overwhelmingly bearish pattern here. In fact, it looks like some pretty orderly consolidation as of right now. That can certainly change, right? That is why we do these updates every several days, is just to keep up to date with what's going on here in markets. But as it stands right now, we are back to testing this breakout area from the end of August, and so far the market seems to be respecting this level and holding exactly where it needs to, but we'll see if that can actually continue. Can we continue to hold this area, and more importantly, can we then bounce and thrust up above, get away from this area and break out to the upside? That is what we're waiting to see. So for the Russell 2000, I think this is a market that is compressed. We are due for some range expansion here. I don't know if it comes tomorrow, the next day, or next week, but it's something to pay attention to. And the battleground level that I'd be paying attention to is right where we are, this 169.50 area. Essentially, you could use yesterday's lows as a good line in the sand. If we start to lose this, if we start to fall back below the June-July highs here, then I would be certainly more neutral to pessimistic here in the short term for the Russell 2000. Finally, the Nasdaq 100 remains sideways, choppy, and still sort of resilient here in the sense that it hasn't lost, despite sort of a kind of a choppy, lackluster pattern here. It hasn't lost these lows. Yesterday, in fact, at the lows here, it looked like things were kind of ugly here for the Nasdaq 100, looking like it could spill over. But once it looked its worst, a buyer stepped in. We didn't get any follow through to the downside. In fact, we reversed and closed strong on the day, and we held those gains today. So for the Nasdaq, it continues to hold on here. This 181 area, this has been the lows now effectively for the past 2 weeks or so. As long as we can hold those lows, and we're, just 1% above that, if that, little over 1% above those lows, then it looks like the bulls are hanging on here in the short term. There's no strong trend to speak of here in the short term, though. It is mixed and choppy. The highs made back a few weeks ago are still in place around 187. So to get that renewed confidence, that momentum, the pep back in the bull trend and step, we would need to be taking out that 187 area. So pretty much a wait and see for the Nasdaq 100 overall as well. So that's really the landscape here across the markets. When we take everything as a whole, it depends on what your time frame is. In the short term, there's chop, there's indecision, there's some mixed signals, but when we look at slightly longer term, we extend those time horizons, there isn't any technical damage to speak of as of yet. We are holding above all key near-term levels. So let's see how that Russell 2000 resolves itself, and let's keep an eye on the 10-year rates here. I think that those two markets there are going to be pretty important going forward. So that is the market environment overall. Let's go to some of the other major markets. We'll go to TLT, the long end of the curve here. This is the long bond, and it is at a very critical level. There's lots of eyes on it, lots of opinions here. So this is, again, just a high stakes level that we're going to be wanting to pay attention to. So far, it hasn't fully given up this very long-term critical support area. This 160 to 117 has been the inflection point going back many years now for TLT. We're at it again. We're testing it for the sixth time in the past 2 years now. So we'll need to see again if bulls can step in here and defend this level once again. Another good market to pay attention to. USO, this has been and continues now to lift here again to the upside over the past 2 weeks now, especially last week, a 3% move, clearing through some of this nearby chop. It's extending these gains this week. It's breaking to new year-to-date highs here. So oil bulls are back on the march to the upside here. We've covered a decent amount of ground in the past several days. It hasn't been an easy, neat chart, or at least in my opinion, I haven't seen any very easy sort of low-risk entries to get involved in here, but bulls are continuing to grind higher, so tough to fight that trend as it stands. Good volume coming in here, and this is 15.25 level, 15.20, let's see, 25, yeah, exactly 15.25 was the highs here made back in July. Let's see if the market can close the week at these new weekly closing highs. Finally, natural gas, or actually we still have metals to look at, but natural gas here breaking out, continuing the breakout from last week here. UNG saw an almost or over an 8% rally last week. We're extending those gains 2.5% to the upside. So UNG is very much back to breaking out, heading back towards the year-to-date highs made earlier in the year. So natural gas looking quite strong here. Actually, yeah, the all-time the highs here from year to date are still up around $27. Again, look at the spot market. There is some deterioration in this ETF, but as it stands anyway, it's parabolic in the short term, tough to chase, but this breakout is very much underway. Finally, let's look at metals here. GLD really sleeping, moving sideways, and kind of exactly what you want to see really in both cases, whether you're bullish or bearish here. If we think we finally washed out here, if you think the pessimism was at the extreme and the trend got ahead of itself to the downside here in GLD, and this is a stabilization before some type of reversal, then that's an encouraging sign. You get the kind of drift higher up here in the MACD. Or if you're just bearish and you want to jump back on, you think the trend is not done to the downside, now you have kind of a renewed sideways bear flag, as you may call it, and you will look to short this on a potential breakdown if it does in fact roll over. Either way, consolidations make for lower risk entry points, just really defined risk spots, and I think GLD shaping up to be a market to pay attention to as we look for some of that expansion in range. And silver is kind of the same story, although a little bit of kind of a lead here and a breakout to the upside. Don't know if that's forecasting something to come for gold. Is maybe gold going to follow in its path to the upside? Yet to be seen right now, but silver trying to get going to the upside. Would like more sideways action here in silver, to be honest, but looks like buyers are kind of stepping in here, so we'll see if they can continue that higher. So that is it. That is what we have for the midweek video. Thanks so much as always for tuning in. Hopefully you're off to a good week trading so far, and I think that's it. So thanks so much. Subscribe if you do like these videos, and I will catch you on Friday.